All right, what's going on, traders? Welcome back to another video. Today is Friday, February 13th, 2026. Today we'll be going over 3 trades that I took today on SPY options. If I'm not mistaken, I took 1 short, 2 shorts, and I think 1 long. But we'll be going over my pre-market analysis. Before anything, going into a little bit of the psychology, the ideas that I had this morning before the market opened. And then we'll go into my live trading session where you guys will see a pretty good trade that I took today and how I executed. So if you guys find this informative and if you guys like this, please leave a like, comment, and subscribe. Let me know down below what kind of videos you guys would like to see, what I could do better. And if you guys have any opinions, any comments, please leave them down below, And so let's get into the video. All right, traders, what you guys are looking at on my screen is today's pre-market analysis. Um, as you guys can see, Friday, February 13, 2026. The time was 9:18 when I wrote this. So let's get into it. SPY rejected by its 180 demand zone, trading at a level where it previously supported, looking to see how buyers and sellers interact and wanting to be extra patient before any execution. So let's draw this out real quick. We have our area demand, an area where demand exceeds supply, right? And then we have an area in which the stock has bounced previously, twice right here, bouncing point here, and then pre-market, we're bouncing here. So this is our supply and demand zones, an area where supply exceeds demand, an area where buyers are willing to buy, and then an area where demand exceeds supply is an area that rejects, right? So we have our levels planned out and pretty much just wanting to be patient for today. If we get into a closer image, this one. So on this closer 5-day, 5-minute chart, we have SPY, clear supply and demand zones. Anything long after 683 has a nice potential up. 683 was this pre-market high. I said anything above would have nice potential up. Reason being that it's had a huge gap yesterday and gaps, usually tend to fill. Reason being there's not many there it doesn't really give the stock time to trade within this level. Like let's say versus this area. This would be considered an area of fair value, and then this would be an area considered fair value. Why is it fair value? Because buyers and sellers are agreeing on price, which causes it causes a stock to, you know, consolidate. So this would be fair value because buyers and sellers are agreeing on price, which causes this to consolidate. This would be considered, if you want to call it a fair value gap, it's a fair value gap. It's a gap between fair values. There's a fair value here where buyers and sellers, were transacting. This is another area where buyers and sellers were transacting, and you have this gap. So that's why I was looking for that 683 potential long. If it was to present itself, we'll be looking to execute. And we come into a zone pre-market where this area of, you know, this area of that was being supported yesterday is now an area that is being rejected, right? It's being rejected pre-market session. It's being rejected right before the market open. If we just move this, you guys can see that this is the same area of demand, right? We have our area of supply in which buyers are stepping in these areas, and so we'd be looking for short 680 has potential to 670. So anywhere around this area, looking to be going for a short, where selling takes over. If it's gonna follow, we can possibly see another move like this. The stock has potential. There's volatility for it. and we would want to be ready to play either side, flip and switch if we have to, right? Um, so here we have my live session. As you guys can see, this is the SPY chart, pushing down. So just looking to be patient. So I tend to wait on at I tend to wait about 5 minutes. I give myself 5 minutes to not press the buttons, not click anything, just watch what the stock's doing. And realistically, I give myself about 10 to 15 minutes. So we get a huge push down, a huge push down. Um, I was at one point I was looking for this short right here. I think as you guys can see, I have my finger on the trigger, going for a put, a 678 put, targeting the lows. Um, I didn't yet. I wasn't in this instant. Mm, I just I didn't have enough conviction on whether the stock was going to continue to the downside. Reason being, it was trading in this area of, its fair value. It's trading in a range. So pretty much what you find when you trade in a range, it's just choppiness. You're going to see it bounce on supply zones and reject in its area of demand. So it came up, it rejected in its area of demand, had a nice push down, but not like a push down where sellers completely took over. As you guys can see, there was some buying pressure right here. You had some buyers step in. It came down again, pulled back up into this area, and then sellers took over. I didn't have enough conviction to pull the trigger on the stock, but I was looking at it for a potential trade, right? So what ends up happening is this thing completely moves. Um, it 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 just, yeah, it completely goes without me. It doesn't provide any pullback. It doesn't provide any other entry. But so what I'm looking for is to play with the side of the shorts, right? So I see what the sellers are doing. I understand what the sellers are doing, and now I want to see, I want I want to pretty much see, I mean, play with those that are more aggressive, right? And in this instance, it's the seller side. To what I have seen so far in the market, we've had a push down, pull up, push down. Um, what I'm looking for here is a push up into an area where I would consider, um, more fair value, and then, looking for a possible continuation of the move. But in complete honesty, I could have waited a little longer. I wouldn't say this isn't a terrible idea, but there was no confirmation to this trade. It could have been avoided. This one could have been avoided. I guess my thing was, since I missed the first trade, I wanted to get inside, get with the aggression, and not really give it too much slack, right? So I set up my stop. We're in the money for a bit, and just looking to be patient and target the lows of the day, playing with the aggression. As you guys can see, um, even though sellers are being more aggressive, um, the buyers are buying up all the shares, and it had a continuation of the move. So we got out for a 1R loss. So we lost 1R. And what I'm noticing up here is it's having an extreme push up. And this is, so here, I'm looking for I should start looking for a put. So it came into our area of demand, right? An area in which it had been rejected in the morning. So I'm looking for a put, because has a huge move up, right? It had a huge move up, and pretty much it came into an area where it has rejected before. And then at this point, I'm just looking for a confirmation to tell me that sellers are in control. But where I did mess up on this trade was I was trying to get in when I noticed the selling pressure starting to pick up, right? And I'll show you something else that validated my trade completely. Um, I was gonna my 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 stop loss was gonna be this 121 level, um this previous low on the premium. I don't know where exactly. I guess it was this one, but for some reason this was lower. So what I wanted to see pretty much was I was gonna try to get a 10-cent risk, which I pretty much got it. Let's see. I got in a really good entry right there. I got in a really good entry right there. I saved myself like 4 cents, but I only got in one contract, which I think is okay. It's okay. It gave me a little more leg room to, withstand some choppiness. In most cases, I think this would have been the right play. And so we get into the stock immediately. I'm risking my 10 cents. I'm targeting, okay, hold on. Okay, okay, submitted successfully. So my target is going to be this previous area of, let's see. So I put my stop loss on the low, targeting a little higher than this previous bounce area. So the bounce area was right here because this is an area in which supports had stepped in previously, right? So I wanted to at least get out around this range. I wanted to target at least that range, right? So we set up our stop loss, we set up our target, and then and why I did that because this stock had no previous support level. None of these are showing me where sellers had stepped in aggressively. This is just a huge flush up, into an area that would be considered overvalued. It's first off overvalued. It's in an area that has rejected before, and then I want to target where buyers stepped in previously. So I'm targeting a short. I'm planning a short. I want to see where buyers had stepped in previously to, get out of my move. And then we start to get our push up. I see where I'm targeting. Yeah. So now I move it down a little more and I'm like, okay, so I'm targeting this low. I'm targeting this low. I'm in the money by 10 cents. I think my 1-to-1 at this point, so I'm looking to go break even. Why did I go break even? I went break even because this had moved my 1-to-1. This is how I trade. When I go 1-to-1, I want to secure profits. I don't want to have this a full loser. I want to at least get out break even if it doesn't go as I planned, right? So, starts going up, starts going up. I'm almost 2R. I'm up 2R now. Looking to be patient. Want to start securing profits. And then like so what it did was um it went through my target and then it said it filled, but I still see this thing on my screen, so I'm like, what's going on? So I'm gonna try to cancel it, or it can't be canceled. I'm like, what the heck's going on? Started to get a little panicky. But on this trade, it was so I was risking 10 cents, right? But let's just say in theory I was really risking with the risk that I put up 10 cents, this was a what I won I mean, I was down 1 hour of this was a 8 to 1, but if I consider it that 20 cents, um where it should have at least gave it more leg room, how I should have had it set up, it was a 4 to 1 trade, a 4 to 1 trade. Yeah. So, um, and but with instance where I would have got stopped out of was it was a 8 to 1. It was a 8 to 1 trade. Um, it was a 8 to 1 and it was half size. Um, but I would consider it really a 4 to 1. Realistically, I think it would have better to look at it like that. And here, pretty much, one thing I've been trying to work on is when I'm in the money, risk, keep on taking on risk. And when I'm not making money, when I'm losing on the day, conserve capital, right? So if I lose 2 trades for the day now is my max. I want to stop trading for the day. I don't want to risk more than $40 in a day or 2R for on the day. And when I am winning, I want to keep taking on risk. I want to learn to keep taking on risk. So today was one of those days where I tried it. It was probably my first day in a while where you know, I took on a good trade. I got some capital. I got some money. I want to take on more risk if the opportunity presents itself. But in complete honesty, I jumped the gun into something, um, which stopped me out, right? We can see it. So just completely choppy price action, like if you try to get long somewhere, it's really hard. Right here it was just really hard. After that one move, that one clear move, everything else was goes up. Nice rejection, but it pulls up. So then right here, I see a break its structure, looking for a short, looking for a short of the move. And it wasn't a bad idea, but this wasn't the area to trade. This wasn't the area to trade, this wasn't the area to trade, right? I think was a good idea, just wrong range. I'm trading within this supply and demand zone, and then I'm trying to short it in the middle, if I'm not gonna, at least when it's trending like this and we have our area of supply, our clear area of demand, I should at least be trying to, short towards the top and buy towards the bottoms, so that should have been that. Um, but I do want to show this. So that area that I had, I'm gonna take that off my screen real quick. Okay. What you guys are looking at my screen is the book map. This is a scanner. So pretty much this shows me volume by price. And I used this today to confirm my trade. I used this today to confirm the trade that I took. And I want to show you guys why. So let me put this right next to my trade that I took, right? So we have the trade that I took, right? We have the trade that I took up here. Like I was noting to you guys, this is an area in demand where demand exceeds supply. Sellers get more aggressive in these areas, right? Sellers get more aggressive in this area, right? And then you can see this red line. This red line is passive participants looking to fill their orders above, above the traded price. When there's a red line above, depending how red, it's more selling pressure. But red lines under are areas that are being supported. As you guys can see, this red line under, and then that's where it reversed, right? Buyers were passively buying in this area, caused a huge move to the upside, and then we can see the same thing above. We see this area where selling orders were being placed, right? And we had our first rejection. The first rejection's right here. First rejection came all the way down. And then it came back into this area and I noticed this selling line, right? These limit orders, these passive participants. It came into it broke out, came back down. We can see buying pressure, but the buying pressure is it's not going nowhere. They're not going nowhere with it. It came back down and curved, and that's when I entered my position, targeting, these areas of, you know, where buyers had stepped in previously, where there was confliction, right? Which was this area. This was the only area of confliction, and then this is where I targeted, and that's where I got out of the trade, and that's where I got out of the trade on that one. So this is another, this is a tool that helps you see the amount of volume per price instead of volume by time, right? As you guys can see down here, this is volume by time. Volume per, traded candle at a certain time. This is volume by price. So you see how much volume there are and how much participants there are at a certain level, at a certain price. And that gave me the conviction to take this trade short. You know, would have been freaking nice if I would have went the full size, right? But regardless, great trade, whether it was a 4-to-1, 8-to-1, however I want to call it. It was a good trade nevertheless. Uh, Looking to keep on trying to take trades like these in the future, God willing, and keep on trying to avoid these kind of dumb trades that I've been taking. It's what it's doing, it makes it harder to show for when I do take those good trades. I'm taking good trades, but it's hard to see that on my P&L when I'm taking trades that I shouldn't be taking that are avoidable. Um, that could be a big game changer right now in my trading. So looking to, keep on learning, keep on trying to get at it, and keep on trying to make these videos with full transparency, showing my winners, my losers, my mistakes, the things that I did right. So, um, yeah, but this pretty much concludes the video. I hope you guys found this helpful, and if you guys did, please leave a like, comment, and subscribe. And once again, thank you guys for watching.